Okay, talking about Tencent today, the Chinese internet giant. It's quite a beast. Just a few things that they do. I have up on the graphics there. WeChat. I think if you have any Asian friends, you'll know they're all on WeChat, and that's got a payment system on there too. So like WeChat payments and other things on Tencent's platform as well. They host games, even the games we play here or that are made here, like anything that Activision or EA Sports makes is hosted through Tencent in China. They have video streaming with sports and music. They have a business side, which is kind of like Amazon Web Services. They have blockchain. I mean, you name it, they got it. It's kind of like a Google, Amazon, Facebook type of play for China. Little bits and pieces of each of them. I wouldn't say it encompasses it exactly the same as any one of them, but has pieces of kind of all of them. $679 billion market cap, and growing faster and better than some of those other giants that we obviously love. The Facebooks and the Amazons and the Googles and Microsofts of the world, and Apple, not to leave Apple out. Okay, let's look at it financially. Financially, it's quite impressive as well. So here's the model we have for it. You see the return on invested capital for many years. Actually, this is no startup. This has been around since 2003 and has grown like a beast. The bottom chart is the the growth in invested capital, growing at 40% almost every year. I mean, not quite 40% every year, but there's a lot of 40s in here, and then still maintaining these huge rates of return. In fact, in the trailing 4 quarters, we have a 32% return on invested capital. That's huge, especially for a giant, right? It's a little hard to talk about the actual numbers because they report in Chinese currency, the Chinese yuan. Our valuation is converted to US dollars, but the invested capital and the cash flow that we're showing on here is all in yuan. So it looks way bigger than it actually is in that sense. And I can't convert it on the fly, other than the valuation, which is done automatically. So at any rate, it is a huge company. It's growing much faster than some of the other ones. In fact, I brought up Google just to compare. Let's have a look here at Google. Okay, so you probably want to go back a few years, even 2006. I know Google was earning a 17% return, growing like crazy too. But you see over time that's kind of eroded. It's not quite the same rate of return. Now, mind you, they put a lot of capital to work. In fact, they have $240 billion worth of capital, and earning an EBITDA of $49 billion, which is no slouch. And we still like Google. Don't get me wrong, but the fact of the matter is, Tencent's numbers are better. They're just better. The return is higher. The growth is higher. The valuation is better. Like just literally every check mark that you would want. I guess the only real knock is that it's not a global U.S. kind of company. It's not, I don't know if that's a knock. It's not quite the right way I want to say it, but there's always a little bit more skepticism from investors with Chinese accounting and reporting. Now, they focus on the Asian market. Now there's Asian people around the world, but it's not quite global in the sense that Google is truly every corner of the world. Tencent would be focused on Asia and the Asian community. So it's still a very, very big market for them to focus on. So there's no shortage of people to focus on. No market shrinkage there that we need to worry about at this time. Lots of runway, good valuation, better metrics than some of the Googles and Apples of the world, actually. So, boy, Tencent looks really good here. Thanks for watching our investment video. If If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.